quickly out there. So I'm looking forward to having Tim and team bring us up to speed on where we are and taking stock of where we are as we sit here in April. The first item on today's agenda is the agenda approval. And would anyone like to make any modifications, or what's the board's pleasure on that matter?
I'll move approval.
Second.
Thank you, Jay. We have motion by Jay and a second by Gavin. The motion is to approve the agenda. Any discussion on that matter? Seeing none, all those in favor, please signify with an aye.
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 And all those opposed with a nay. Okay. So our first matter of business here passes the agenda as set out in our materials. Our second matter of business here is approval of the minutes from our last meeting back in February. How would the board like to proceed on that matter?
I'll move approval, but Eric.
Thank you, Jay. And I see a second from Gavin again. Any discussion on the minutes from February? Seeing none, all those in favor, please signify with an aye.
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 And all those opposed with a nay. So the ayes have it. The minutes of the February meeting are approved. Our third matter of business here is public comment. I am just perusing the participants this morning, and I do not see any members of the general public present. So I think I'll leave it open in case I'm missing anyone, but I think we can move on to our next item here. Seeing no members of the public present, our next matter of business will be an update from the Vermont Pension Investment Commission. And I see Eric Henry is on the line. Eric, we're getting to you a little earlier than the time set out in the agenda. Are you prepared to give us an update?
I am prepared to give you an update. Can everybody hear me?
We can, sir. Thank you. Appreciate it.
Sure. Good morning, everybody. I'm sure you're all aware of the chaos happening in markets with tariffs. It's interesting in times like this at VPIC, one of the most important things we do during periods like this is to actually not really do much of anything, but to sit back and watch the markets and make sure that our plan is operating as intended. When you think about downturns like this, whether it be going all the way back to the tech bubble, the Russian debt crisis, taper tantrum, any number of market crises like these, very difficult to see them coming and very difficult to try to position a portfolio in advance of any one of these events, even if you were able to time a flight to safety if you knew this chaos was coming. And I think most folks were surprised by the magnitude of the tariff announcements. Even if you knew they were coming and were able to get out of all your risk assets and go into U.S. Treasuries, there's another decision that you need to time accurately, and that's a decision to go back into risk assets. So again, very difficult to time any kind of market moves around something like this. In contrast, what we do is attempt to design a portfolio that maximizes long-term returns within prudent levels of risk and liquidity. Long-term is a key word there. We're not trying to maximize returns over a week or a year, but 30 or more years if you think about these pension liabilities. The assets that drive those long-term returns are our growth assets. About 70% of the fund is invested in these growth assets, things like public stocks, private equity, private credit. The illiquid portion of the growth asset bucket is about a third of it. Those illiquid assets not only provide us an illiquidity premium, but are protective in a quick market downturn like we've seen because they're not marked to market daily. Certainly over time, if stocks lose value, we would expect our private market companies to lose value as well. But the fact that they're not marked daily gives you a lot more margin for error and gives our managers more time to work through them. The next piece of the portfolio that has been helpful to us is our downturn hedging asset allocation. About 19% of the fund, all invested in core bonds. We spent a lot of time thinking about this downturn hedge because returns on core bonds had been so low for so long. They're actually a drag on performance until you really need them. And if you try to wait till you need them to buy them, they become prohibitively expensive. So we have about a fifth of the fund in these downturn hedging assets. They've been very protective during this downturn. So as an example, through yesterday's close, our equity allocation down about 9%, publicly traded stocks globally down about 9%. Our core bonds roughly flat, so very protective, operating exactly as intended. If you think back to the COVID sell-off in March of 2020, global equities had sold off by 30% or so. At that point, our core bond allocation was up by 10. So again, showing that negative correlation with equities when we need it the most. Through this morning, through yesterday's close, total fund return would still be positive, likely up 1% or so. We'll see what happens with continued news on the tariffs. Again, we're not something we can or would try to trade around, but we're watching the situation very closely. Happy to take any questions or give you more color on how we think about this stuff otherwise.
Eric, I wonder if you could just provide some color on VPIC's thoughts on global equities versus U.S. equities and your holdings there and how those have behaved recently.
Sure. So we've taken a slightly different approach than many of our peers, and we don't have a home country bias in our equity allocation. Many funds would set up an indexing program that would overweight the S&P 500 and underweight Europe and Asia and Australia. Instead, we've decided that we're not smart enough to time any of the changes in global market valuations. For a long time, U.S. stocks had been overvalued, non-U.S. stocks had been undervalued relative to each other. We've essentially taken the standpoint of taking the whole market beta for all of the world. The MSCI ACWI IMI invests across essentially every economy in the world, with buying those stocks at their market cap weights. So in the early days of this downturn, when the US was off more than Europe, that was protective as well. Europe actually provided somewhat of a hedge to us when it looked like Europe was going to work around the US and reach out to China and work with them directly. Those two have since somewhat equalized in terms of sharing the pain. But again, we're sort of agnostic to, is one region overvalued relative to the other? We accept their global market cap weights as they stand.
Thank you for that question, Gavin. I'm not seeing any. I have a couple. So if I'll jump in, but please, if anyone else has anything, please raise your hand. So Eric, what you just said there really, to me, that just underlines really the importance of diversification, really making sure we're diversified across economies, not just asset classes. I just have two questions, not to, again, being long-term investors, not to sort of perpetuate too much over performance, but you said down 9% at the close in equities. I assume I think that's for the calendar year, and being 1% so up. That's speaking really to our fiscal year, dating back to July 1st. Is that accurate? Just want to parse that out a little bit.
The down 9%, I'm sorry, I should have clarified that, is since March 1st. So the last performance report we had, the audited performance we had, was as of the end of February. So we're using that a sort of a time period to approximate returns since then. So if you think about equities being down 9% since the end of March, we are roughly up between 0.5% and 1% fiscal year to date.
Thank you. Thank you. And then my other question is really thinking about sort of markets as they're intended to function. It's just kind of it's notable to just see the volatility. I mean, to see the indices in the most well-functioning market just respond by 10% on the turn of a dime. I mean, obviously it's a high volatility environment, but it still seems quite notable. Just I guess more color on are you seeing markets function as intended? Are you seeing any signs of stress that would concern you in a material way, or is this really another one of those crises that we just sort of can be comfortable with our asset allocation the way it is, and having that see us through to the other side?
Every place we walk.
A couple of points. I would say markets are functioning as expected. We were developing some concerns that liquidity in the treasury market might be challenged. We had a successful treasury auction yesterday. I think that was very helpful in calming folks down. But I think the reaction of the bond market is what really had gotten some of the policymakers, I think, we're kind of rethinking this strategy. It's hard to say what's going on inside their heads, but that seemed to be the biggest warning sign out there that there could be challenges coming in the treasury market. In terms of U.S. being the biggest, safest, most liquid developed market, for a long time I mentioned that U.S. had been overvalued relative to especially Europe. And many folks were, I think, trying to rationalize that. And we were beginning to see studies suggesting that maybe the U.S. warrants a higher PE than Europe because it is so liquid, because it is so large. I think what we're seeing over the last couple of days maybe pushes back on that, and maybe this time things aren't different, that equity valuations really do matter and really do drive future returns. We're big believers in that theme. And as a result, as we look ahead to think about future returns and expected returns, one of the biggest drivers of that is current valuation levels.
Jay, I see you have a question. The floor is yours.
Not really a question, Erica, just a comment at Eric Henry. Your presentation just reiterates things that you've already shared with us in the past about the VPIC approach to managing our portfolio, and I'm just impressed again with how sensible, steady, thoughtful the approach is, and under these conditions, it's working as expected. I guess I'd also comment that our risk assessment that's about to happen it seems very timely and appropriate. But I'd be surprised if we're going to find any significant surprises in the risk assessment again because of the approach that you're using. So thank you for that.
Thanks, Jay.
Yeah, thank you for that comment, Jay. And you make an excellent point on the risk assessment. Eric, thank you for coming in and giving us this update. I also appreciated the update that you sent to VPIC members about a week ago. I knew people would be curious, so I was going to share that. If you weren't here to speak for VPIC, I was going to share that update. Again, it really reiterated exactly sort of the point Jay made about a very even-keeled, rational approach to conditions that can be quite unnerving. So I that was appreciate your hand on the wheel, and thanks for sharing the information with stakeholders and coming in and sharing information in this venue too. It's very much appreciated.
Thank you all. If you have any questions afterward, please don't hesitate to reach out to me either collectively or individually. Happy to give you guys whatever context we can.
Thanks again.
Thank you.
Appreciate it.
Take care.
Definitely glad that Eric was able to make the time to be here with us this morning. Again, a little bit ahead of schedule here. The director's update is the next item on our agenda. Tim, I assume you'll be leading this item.
Yeah, and Mr. Chair, I did just want to also say we have Jeremiah Breer here, our CFO, and he takes the lead in managing our OPEB investments. We had a call with our advisors Tuesday afternoon. I think what we heard and what is very consistent with what you just heard from Eric. We are a little more heavily weighted in the bond fund, so I think that helps us in this instance than VPIC is. I think we're about 29% exposure according to my notes. I don't think there's any surprises there, and it's performing in a similar manner to the pension funds. But I would just, if you'd like, Jeremiah, if you have any comments on the OPEB funds, now might be the time.
Good point, Tim.
Sure. Yeah.
Thank you.
I think that pretty well covers it. And I mean, our portfolio is it's very similar to the VPIC portfolio. I mean, it was designed roughly to mirror it. So a lot of the things that Eric said there, apply here. We have an all-weather portfolio, that is designed to get us, long-term returns, and then also, contemplates that there will be these sort of corrections in the market. And so we also have downturn hedging assets, inflation hedging assets, and we are in very close contact these days with our investment consultant, Jason Samansky at RVK. And his advice is similar to the advice that Eric is getting, that we should stay the course here, because as Eric very, very astutely pointed out, even if you time getting out of the market, you got to time getting back in. And that is when people react to these sort of downturns, that's actually often where the real losses happen, is that they're able to get out, but then they miss the rally when the rally happens. And so you are best served by sticking the course. So we talk to, when we talk about total return figures of the portfolio, if you watch the market, that it's very volatile. So we've been in contact with Jason pretty much daily, and every day that we talk to him, our portfolio total returns are a little bit different. So we talked to him a couple days ago, and we were looking at 6 to 7% in the negative for the year. And then we had talked to him yesterday, and there was a rally, and so we got a little bit of that back. But the overall, I would say, is that we do have an all-weather portfolio. We are sticking the course. We have an asset allocation that is designed, similarly to Eric's advice, to weather these downturns, but then to give us, over a very long time horizon, very good returns. We are also in the enviable position that the OPEB funds are cash flow positive. So we have more, we have more cash coming in with the 8X than we are paying out in health insurance premiums, and so that does give us some flexibility. So we have no need to sell any securities in order to raise money for the benefits, and then that cash also just gives us some flexibility in order to rebalance the portfolio if need be, or what have you. So we are in good shape, and staff will continue to monitor the situation very closely.
Thank you, Jeremiah. And Tim, thank you also for lining up both Eric and Jeremiah to give us an update on all these different funds. Appreciate it. So might have been a little early on that, but potentially now the floor is yours for the director's update.
Sure. Thank you very much. And thanks, Jeremiah. Yes, I did figure that, while you may be interested in my updates, that what's on everybody's mind is what's on everybody's mind. So glad that Eric and Jeremiah could accommodate us on short notice. Not really a ton in the director's memo that I want to dwell on. I really was trying to follow up on some items that we've been talking about over the past year. The Act 114 COLA changes has been very top of mind in our office over the past few months as the reason why all of the changes really didn't take effect until this cycle was because the Act 114 added a 2-year delay for new retirees in receiving their first COLA. And so from an implementation programming perspective, this year was a really important year where the rubber hit the road, and we had to make sure in our testing that everyone who had qualified for a 1-year delay was getting their COLA on time, a 2-year delay was getting their COLA on time, and we think we got it. We're not aware of any concerns or problems with it. It did take a substantial amount of testing, fixing, and whatnot. So very pleased with how that's gone through. Over the past couple months, we've done I think starting in the late 2024, we decided to do a sort of an audit of our RMDs, making sure that we got all of our RMDs out. And unsurprisingly, to some degree, we found a couple that fell through the cracks. Fortunately for this board, none of them were in the VSERS system. They were all in the Muni and the teacher system. I think that probably speaks to some of the good coordination between DHR and the retirement division. Folks, we're aware of folks, they're aware of their benefits. And so we didn't find anyone who we had missed. Why I say not terribly surprising is, as many of you know, over the past few years, the RMD age has crept up. And so it created kind of challenges where it was 70 and a half, then moved to 72, 73. So it's with a moving target. Some of our systems hadn't caught up to the actual RMDs. In any event, we talked with outside counsel, figured out a way to do a self-correction and have those all in process in the other systems, and also revamped our procedures for catching RMDs going forward for all systems. Member communications are an ongoing effort, and I think we now have a team that is working on retiring times, and we do hope to return to at least a twice annual publication of those documents where we're going to be a little bit more intentional with them. I think since I've been in the office, I think starting back to 2017, they were pretty sparse and I think published when we could. I think that was a fact of lean staffing and not really having folks dedicated to that effort. With the additional staffing we've got over the past couple of years, we're trying to take folks and focus them on certain areas. So we do have a couple folks who have some publishing background who are helping us lead that effort. I'm excited about it. I'm looking forward to meeting with them this month to see what they have in store for our first issue back. And we also are making progress on our teachers' plan summary. If you recall, in the fall, we had talked about putting nice glossy plan summaries together. It's taken a while with some back and forth to kind of get the teachers as our guinea pig. And we've been going back and forth on style and how we really want this to look. Haven't had a layout yet. We're still in the editing phase. But I'm hopeful that we're going to be moving to layout with that one in the next month or two, and then we'll be moving into the state and municipal systems. Last year, I think it was last year, yeah, we did a review of our supplemental plans with RVK. This came about because after the restructuring of our investments team moving over to VPIC, we realized we kind of had a hole in that space. Looking at our investment plan lineups, we did a one-time review and we're gratified to get a solid report card from RVK when we looked through it. But we've decided to we did an RFP process, and for someone to perform that service on an ongoing basis, RVK was the best bid, and just I think last week, we finalized the contract, so they'll be on board, and we're looking forward to a kickoff meeting actually next week on sort of how we're going to move forward with a sort of more regular annual review of our plans. And then finally, the server migration, that was something that we had proposed to the board because our on-premises servers were end of life, and that method of utilizing on-premises services to house our data is one that is not favored by ADS, or really it's not a best practice anymore. And so this past weekend, stressful weekend, was when we made the switch. And this week we're moving through, any of the nits and gnats that we have with any kind of migration like this. But Nicole's been leading the effort, and it has really gone about as seamless as it could go. So very gratified for that. Some of the other stuff in the memo is just, things that we've already addressed, the uncertainty, or we will address with the medical review board in our next item. The final thing I just wanted to note is our May meeting. We are really excited to have folks come in person for the state board meeting. That'll be the morning of the May 8th. And our plan is going to be to have, our vendors from Siegel, Empower, and RVK give some presentations, but also make time for folks to, take a break, meet each other in person. And we're also going to have a lunch. We have an hour in between the state meeting and the teachers meeting. So we were going to have a lunch in the room where, hopefully both boards can, meet each other, talk to our vendors and any of the staff that's around, and hopefully use it as an opportunity, not just to learn about, the risk assessment or, Empower, what have you, but to, we haven't met in person since the before times. And I think it'll be nice to have that opportunity to meet and chat. So that's what I have for you, but also happy to take questions on these or any other topics.
Thank you. Thank you, Tim. Do I see?
Mr. Chair, if you don't mind, I just have a comment.
Oh, please.
Yeah. So, as the board knows, and as Tim just mentioned, we've hired new staff and onboarded them over the last couple of years. All who have arrived have stayed, and really seem to be thriving. And I just wanted to highlight for the board that Nicole and Tim have really done a great job of both integrating those folks and kind of modernizing, rationalizing our structure. Tim mentioned having folks specialize, but the other thing that they've done really well is to elevate folks who are doing a good job to supervisory positions. And I think people are really feeling good about that internally, the opportunity to grow and progress in their careers. So just wanted to mention that. Thank the board for its support in getting those positions. And most of all, thanks to Nicole and Tim for all they do every day to make this a great place to work.
Thank you, Gavin, for that color.
Here.
Being inside the office there, I appreciate that. Tim, thank you for the update. I also wanted to reiterate, I'm looking forward to the May meeting. It's an interesting way to phrase it there, though, before times. But in looking forward to it, I also just wanted to recognize that it takes a lot of work to put the agenda together. So thank you for putting in that effort to facilitate, an in-person meeting with a lot of good content. I'm looking forward to the content and also just getting a chance to gather again. Appreciate your work on that. Not seeing any other hands raised. It looks like the next item of business on our agenda is something we've been looking forward to doing for a little while, and happy to see it on the agenda. The appointment of Dr. Rouse to the Medical Review Board. Tim, or maybe it's someone else, but I assume that you might want to provide a little bit of color on this matter.
Yes, thank you. And you're very right, Eric. We've been looking forward to getting up to full strength on the medical review board for some time now. I've been bothering my friend over at the Vermont Medical Society regularly to lean on her newsletter, try and reach out to the to doctors, and actually it worked this time. The name is pronounced Roos, actually, Dr. Roos. He mentioned that he just happened to be, he's recently retired from Northeastern Vermont Regional Hospital. He was there for some time, and he was looking at the Medical Society's newsletter and happened upon our ad. And so I'm very grateful to Jessica Bernard at the Vermont Medical Society for helping us put that in regularly and helping us recruit. So Dr. Roos, you see by his resume, he is a Vermonter through and through, and he has been for many years at the Northeastern Vermont Regional Hospital. As I said, recent retiree, so he's still picking up a couple of shifts there to help out. He, as you know, performing in a hospitalist function. And what is perhaps most attractive about his resume is that one thing he has picked up in his retirement is working for the Social Security Administration doing disability determinations. I think that that experience, is going to really actually help us and inform our reviews. Social Security is obviously its own, it's got a lot more rules, regulations. It's very rote. And I think we'll have the opportunity to learn from him and his experience there. So that on top of, when we met with him, when Brianna and I met with him, he just seemed like a wonderful person and comes highly recommended from friends I've talked to in the medical field. So we would recommend to the board to appoint Dr. Roos to the Medical Review Board for a term of 2 years. But happy to answer any questions.
I'll make that motion to appoint Dr. Roos.
Second.
Okay, seeing the motion and a second, the matter is approval of Dr. Roos. Is there any discussion on the matter? I see, Beth, you have your hand raised.
Yeah, I just had a quick question. Is the way we compensate is per diem? Is that how we do it? Yeah.
Yes.
Okay. Thank you.
So case, I guess I would say. So it's not like a per diem for a meeting. We provide a payment, $150 in this case, to the doctors for each review they conduct. So they may have a meeting and there's like 3 reviews, they would be compensated per case.
But they don't become a temporary employee.
Correct.
Okay. Thank you. You probably know why I'm asking.
Thank you. Any further discussion? Not seeing.
Eric, you've gone to mute.
Apologies on that. I just realized that. Not seeing any further discussion. The matter is the appointment of Dr. Roos to the Medical Review Board. All those in favor, please signify with an aye.
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 Hi.
All those opposed with a nay. Well, the ayes have it, and Dr. Roos is appointed to the Medical Review Board. Please pass on the news to Dr. Roos. Glad to be fully up to staff, and thank you for reaching out and for meeting with him. That's exciting. It's great. So the next item on our agenda is the legislative update. Tim, will you be taking that as well?
Sure. Yeah, nothing's going on. Kidding. The main thing I wanted to update the board on, well, there's two main things. We talked about previously the Budget Adjustment Act, some of the waterfall language that was put into statute in Act 114. That language dedicated 25% surpluses to the state system, 25% to the teacher system. The teachers has a bit more detail with where it's specifically directed. There has been some movement on that language over the past few months. As you recall, in the original House version of the Budget Adjustment Act, that language was not withstood, and surplus revenues were carried forward into the following fiscal year. There was change. They kind of brought the Act 114 language back in the Senate version, but both budget adjustment acts were vetoed, and so those. It's unclear to me whether or not there will be another Budget Adjustment Act. Others probably have more information on that point. In the budget, the House language that again notwithstands the surplus, the Act 114 language, has been passed, and so the issue now is with the Senate, and I know they will be considering that waterfall language, as it's called. Actually, for another of points, I know Commissioner Gresham, you had some commentary on that in your letter to the Senate committee. So that's something that I thought would be of interest to this board. The other point I just wanted to highlight is that in the House budget, our team looked at everything, and all our revenues for our 8X for all the systems are fully funded. So very gratified for that. I'm sure others might have additional color, but those are the main issues that I wanted to bring to the board's attention.
Just the smallest clarifying point on what Tim said last, which is, the 8X are all funded and the plus payments.
Yes.
Well, thank you, Tim, for that update. And, being cognizant of how, as you highlighted with the Budget Adjustment Act, that, the language can change quickly. Does anyone else have any color on those discussions? Would like to comment? If not, I have a question. Not knowing exactly where this issue stands, quite at the moment, but again, that it can change on a dime. As Tim, as you and Gavin as well, as you all are communicating with the legislature and discussing these issues, the language via statute calls out this board calls out the system specifically, and as fiduciaries of the system, I'm wondering if you think it would be helpful to have some perspective from the board on the language.
I don't think it would hurt if the board, has a position on this topic to express it. Gavin, I'll defer to you if you have any other thoughts.
Yeah, no, don't disagree.
Okay, well, I'd like to move that the board supports the existing language and statute in section 29308C, which is the existing language brought in modified after as part of Act 114.
Sorry, I believe it's 32. Isn't it Title 32? I'll defer to Justin.
Yes,
I believe it is Title 32, Section 29. My apologies.
I'll second that motion.
With a motion and a second, the matter comes to the floor. Any discussion on the motion? I see Beth, you have your hand raised. Please, the floor is yours.
Well, I just apologize. I'll just abstain from voting because I missed the discussion. I had to step away for a call.
Okay, thank you. So should we plan for a roll call? Why don't we take it via roll? And if it's unanimous, it's unanimous.
Bill, are you able?
Yeah, I was just going to ask if Bill wouldn't mind reading the roll.
I know he's been having tech issues, so if he doesn't pop back on, I'll do it. Okay, I will just, I'll do it and I'll go in the order that I see folks on the screen. Bruce.
Yes.
John.
Aye.
Eric.
Yes.
Gavin.
Yes.
Jay.
Yes.
Adam.
Yes.
And Beth.
Abstain.
Right, the motion carries with 6 in favor and 1 abstention.
Thank you. I assume that concludes the legislative update. Is that correct?
Yes, unless anyone else has anything that they'd like to cover.
So not seeing any. It looks like the second to last matter of business here is the upcoming trainings memo that was included with our board packet. Tim, would you like to provide any comments on that? I know it's probably for our information, but if you have anything to add, please do.
Again, we have budget for board members to do some trainings. If you're interested, I know I have a teachers board member who will be doing the NCPERS TEDS. I am trying to see if my schedule will accommodate me doing the NCPERS ACE conference. So these are really valuable conferences, and we're happy to work with you if you have the time and inclination to attend one of these conferences. For thoroughness, we put in the conference in Honolulu. I would suggest that might not be the best conference to attend. Just in there out of being thorough.
Appreciate that. I had a similar thought when I saw that one. I'll just add to that. I have not done any of the second group here, the international, the IFEPBP conferences, but I have participated in the NCPERS programming, and I will speak for it just being very beneficial. I did the trustee educational seminar. Half of that was during COVID time, and then the programming sort of precedes the conference. So then I did the second portion before going to the conference one year. It is an amazing opportunity to do general education, but then also see what other systems are doing to manage things through some of the presentations, and then also just to network with other trustees and stakeholders. So I just want to throw that out there as it is I think it's a really valuable educational opportunity. So would encourage folks to take a look at it. John, I see you have your hand raised. Please, the floor is yours.
Thank you. You answered most of my questions just now when you were speaking, but I look for someone to maybe contrast the July retirement plan basics with the other basic seminar that I think I saw, the trustee educational seminars. There reason to favor one above the other. I wouldn't be able to attend until November at any rate, but I'm just trying to get an idea of the landscape of these and how often they're offered.
Yeah, these are going to be offered. If I were going to do one of them, I would probably lean to the NC PERS, given that that is one of our, we belong to NC PERS. It's one of our trade associations. The IFEPP is going to it will be applicable to public government plans, but the NC PERS is going to be much more focused on that. So if I were leaning, I would go there. I have actually never attended International Foundation of Employee Benefit Plans seminars. It comes highly recommended from my colleague over in New Hampshire, who's the director of the New Hampshire pension systems, speaks very highly, and I've had others speak the same. So I don't have personal experience on that suite of conferences. And I actually have not yet been to an NC PERS conference. That's why I'm considering the ACE, so I could see what those are. But all reporting is that they're very, and Eric's in particular, are that they're very strong conferences and very germane to our specific type of plan.
Great, thank you.
Sure. And they'll come around annually.
Yeah, and they sometimes have the training parts even more frequently than annual, with lined up with some of their other their ACE is their big conference, but they have some other ones, and then they'll run the training sometimes with those. So there's more frequency to the training portions than the big annual one.
And I guess my final point, John, would be if you're interested, just reach out offline. We'll talk about what's out there, and we can try and find something.
Sure, Tim. Thank you.
Thank you for sharing that with us and the discussion around it. It looks like the last matter on the agenda here is any other business. Does anyone have?
Yeah, the only thing I'd like to let folks know, we did put a survey in the memo for attendance at the May meeting. We're trying to plan head counts and just get our ducks in a row. We will send that out again by email. So just within the next few weeks, when you see something coming from Bill, if you could just let us know if you're going to attend, that'll help us organize and try and make it a little bit more productive. Thank you.
Thanks, Tim. Any other business to come before the board?
I guess I'll just comment. I tried clicking on the link as it appears in the document on my screen, and it doesn't work. Maybe if I downloaded the document. I haven't actually downloaded it, but anyway, I did have a little technical difficulty with that survey.
I'll ask Bill to reach out to you, and we'll make sure that we get that. Thanks.
Thank you. I'll keep an eye out for the survey as well. Any other business to come before the board? Not seeing any. Any other motions to come before the board?
Why don't we just stay here and look at each other for the next hour?
Well, I guess I'll move. That's a wonderful point. I do have a
motion to adjourn.
Thank you, Jay. Do we have a second?
Second.
Yeah, I see Gavin with a second. So the motion to adjourn is on the floor. It's not debatable. All those in favor, please signify with an aye.
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 All those opposed, nay. The ayes have it. The meeting is adjourned. I was wondering if I'd have to go with a roll call, Jay, for the adjournment, but
Thanks, everybody.
See y'all.
Thank you all. Thank you all. I really appreciate it.